Hey, welcome back. Three market stories today. A major policy debate about dual listings. A regulatory warning hitting Mirae Asset over SpaceX IPO marketing. And a bold growth plan from a small cap company that's turned aggressive M&A into a 37-fold increase in market cap. First up, the dual listing debate. Korea's Financial Services Commission and the Korea Exchange held a public seminar on April 16th outlining a plan to ban dual listings, where a listed parent company lists a subsidiary separately, as a general principle starting as early as July. The argument from regulators: Korea's dual listing ratio stands at 11.2% of market cap versus 4% in Japan, 2.7% in Taiwan, and 2.4% in China. An analysis of 261 dual-listed companies between 2000 and 2024 found that parent company share prices fell an average of 10.8, 1% 6 months after a subsidiary's IPO. The proposed review criteria cover three areas: operational independence, management independence, and investor protection, including a requirement for general shareholder consent from the parent company. The review scope is broad, effectively covering all unlisted subsidiaries of listed companies, whether created through physical spinoff, restructuring for holding company conversion, or M&A. But the pushback was significant. Industry voices raised several concerns. Korea has a manufacturing-heavy economy where large capex needs make IPO-based fundraising more structurally necessary than in other markets. Past government policy actively encouraged holding company conversions, meaning many current structures were created with official support. The venture capital industry was particularly vocal. The Korea Phi-C Association's vice chairman warned that IPO is the primary exit route for public fund investments, and blocking subsidiary listings could destabilize the entire venture ecosystem. A GS Entech representative made an unusually direct public statement at the seminar, arguing that blanket restrictions would harm minority shareholders and employees of legitimately independent subsidiaries. Critics also noted that the seminar provided no specific thresholds or examples for key questions: shareholder consent percentages, sector exemptions, small cap carve-outs, leading some to call it a substance-free seminar. Next, Mirae Asset Securities received a verbal warning from financial regulators over its handling of the SpaceX domestic IPO project. Regulators told the firm to scale back marketing after concluding that ongoing public disclosure of an unconfirmed allocation plan amounted to indirect marketing. Under current law, there is no precedent for a foreign IPO being offered to Korean retail investors via public subscription. Despite this, information suggesting retail participation was possible spread widely through social media. Regulators' core concern: investors may already believe retail subscription is available, when in fact the allocation volume hasn't been set and the legal pathway for retail access hasn't been established. The regulator drew a parallel to the so-called Mirae Asset Prevention Act, a 2016 amendment to the Capital Markets Act, triggered by Mirae Asset Daewoo's use of 15 special purpose vehicles to effectively conduct a public offering while technically staying below the 50 investor private placement threshold. Sources indicate that internal sentiment at Mirae Asset is itself skeptical about the retail allocation plan, with one insider saying the process has barely moved and that individual subscription may not happen at all. Finally, Sungho Electronics Vice Chairman Park Sung-jae gave an interview to Seoul Economic Daily outlining an ambitious 5-year target: 4 trillion won in revenue and 1 trillion won in operating profit. The company's market cap has surged from roughly 100 billion won to 3.7 trillion won over the past year, driven by 7 completed M&A deals in 12 months. The most notable acquisition was ADS Tech, a maker of optical transceiver equipment, completed in February. ADS Tech has supplied Mellanox, an NVIDIA subsidiary, since 2021, and was recently selected as the sole supplier of co-packaged optics equipment for NVIDIA's next-generation AI data center architecture. The only other company in the world making this equipment is Germany's Finisar Viavi. Sungho Electronics recently raised its stake in ADS Tech's holding company to 100% using 65.8 billion won in bond with warrant financing. Park explicitly ruled out equity dilution through a rights offering at least through the third quarter. Securities analysts expect Sungho Electronics to post approximately 80 billion won in operating profit this year. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.